Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, welcome back to the show.
Jim, it's a pleasure.
John, Highway 50 provided an update on its Monroe Lake project on American Thanksgiving, and the market thanked the company by driving the stock down to a nickel. What is the market so ungrateful about?
The market this year is very ungrateful about how zinc-led projects have performed for them. Highway 50, we've talked about it many times in Discovery Watch. Its flagship project has been the Monroe project, which the John and Gordon Leask, the key principals of Highway 50, privately own. And this is in southeastern British Columbia, where the goal has been to find a Sullivan II deposit, 150 million ton deposit, world-class deposit. And they've been working on this for several years under a farm-out deal where they optioned 50% of the project to Highway 50 for spending $2.9 million. Now, that $2.9 million is supposed to have been spent by March of next year, and there's still $900,000 left. And they've been working really hard to try and home in on a target beneath Monroe Lake where they have evidence that there is a smaller scale Sullivan-type zinc-lead silver system waiting to get that discovery hole into it. And in late September, they took another shot. They've had bad luck with holes that either deviated from the target or just didn't get quite into it. They drilled 2 holes. One of them made it to 1,000 meters, but it hit nothing of any interest. And in their explanation, they say that it looks like we are outside this sub-basin, which is a structural term for these sedimentary systems, where the deposit is likely to be located. So basically, it missed the target. The second hole, which they aimed better at where the target should be, they lost it at 400 meters. And this has been a problem. And the unfortunate thing is, here we are, it's the end of the drilling season there, and we still don't know if Monroe just hosts some marginal something or other, or hosts a major discovery. And the problem is, when they started drilling, they already had a $450,000 working capital deficit. That's negative money, and it was even worse. About $656,000 was owed to insiders, presumably the Leask brothers. And this program will have cost at least $400,000. So by the time we get the financials at the end of this year, this company will probably have negative working capital of about $800,000. A good chunk of it is owed to key insiders. But to make things worse, at the end of October, Regulus Resources decided it had enough of the Golden Brew option, where it could earn 50% by spending $5 million by 2022. It dropped that option after mediocre result. This is again an undercover deep play where they're probing for a Carlin-type system that they think is present because of their structural analysis of the general area. And this project has a $100,000 payment due in January to the underlying vendor. So when you look at Highway 50, basically from a fundamental perspective, it is an all-out bust. The vendors will have to renegotiate the Monroe deal to keep it alive. There's a whole bunch of debt that will have to be settled for paper. The company has nice structure in that there's about 37 million shares issued and 46 million fully diluted, with probably most of those warrants eventually evaporating because they're a lot higher than a nickel. But tight structure doesn't mean anything when you're in debt and you don't have stories that can be pushed forward with any sort of a reasonable prospect of funding at a better price. So the market was ungrateful that the truth machine failed to deliver the discovery. And market's been unhappy elsewhere. Cantech's mine development ran to almost $7 this year. It had a valuation of $350 million for its North Rackla project. And this is a Chuck Fipke company that's rolled itself back many, many times. So the original backers have only an infinitesimally small piece of the action. This was billed as a Broken Hill style system. And a Broken Hill system is a SEDEX system, something like the Sullivan, that has undergone folding and metamorphism, which has changed the nature of the mineralization, remobilized it, and often made it thicker and richer than the original system was. Well, they have very high silver, zinc, lead, silver grades, zinc, lead combined in that 15 to 20% range with good silver numbers. So this was very promising, but the geology and description just doesn't really fit the Broken Hill model. The intervals have tended to be narrow, so it looks more like a traditional SEDEX system, and they need to build a lot of tonnage, even at that grade, in that area, because it's a remote area, and lead-zinc mines produce a concentrate that has to be trucked or railed to a port where it can be sent to a refinery. And this is even more remote than the Orion Osiris project of ATAC Resources, where they're pursuing a Carlin-type system. So the market looked at this and said, well, you don't seem to have the goods, and the stock has plunged from $7 all the way to $1, where it's flirting with getting lower. Another zinc-lead story that the market's very unhappy about is in-zinc mining, which a couple years ago was very interesting for its West Desert project. They spent money on it. There was some encouraging results. The deeper potential was not validated, but they shifted the focus to the Indy project, which, unlike North Rakla, it's in central British Columbia, in an area where transportation infrastructure is not going to be an issue. And here they could, if they found something, SEDEX-type systems, and that's what they are chasing, they would definitely not have infrastructure as a reason to be negative about it. But the reason the market's negative about it is that this thing was optioned from an insider. They have to spend $2.6 million by 2022. They've spent about $1 million of shareholders' money that shareholders thought was going into the more advanced West Desert project in Utah. And this year they spent about $300,000 on more surface work. And they don't need to spend anything next year, but there's only $300,000 left. So unless they farm this out, probably this property will go back to the insider with $1 million worth of enhancement done on it, and he can farm it out to somebody else. And with the stock at 2 cents, and everybody giving up on management is really working on behalf of the shareholders, this stock will probably be rolled back and acquired by somebody else who may or may not do something with West Desert. So it's been kind of a miserable year for these zinc-lead SEDEX deposits. Even though Cisco Metals, a favorite of mine, it's down here at 41 cents. They've had to sell a royalty and raise more money to keep the Pine Point project going. The market's been sort of negative on zinc in general because even though it has some structural supply problems looming, it is linked to the outlook, the macroeconomic outlook, and although the indicators are changing, the ratio of 10-year to 3-month T-bills is no longer signaling that a global recession is imminent, but still the outlook with the trade war, it changes from one day to the next, and the general mood as far as these base metal plays is concerned is that we're not out of the woods yet. This possibility of a global downturn induced by escalating trade war, it's very real, and it's why we're not going to be enthusiastic about these base metal stories until something in this area changes for the positive.
We'll have more with John Kaiser right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. Rugby Mining announced that it's starting field work on one of the Colombian gold projects it acquired from Barracks, which its title application is still pending. How is that possible?
That is a good question, Jim. How do you go and do work on a project for which title is still pending? Well, in Colombia, you can do field work if you have permission from the local surface rights owners, and Rugby does have permission to do this. So it's going in there to start upgrading what they can with surface work, geochemical sampling, prospecting, and so on. What they cannot do without a proper title is to drill. And the reason they own this project, the Pastora application, is that Barracks spent a decade in Colombia, spent $20 million US generating prospects and filing these applications into the Colombian system, but finally gave up in 2016 because none of these applications were being converted into proper applications. And so they ended up walking away from Colombia, and they sold this entire subsidiary, what they call Soratama, to Rugby for not very much. And it's why Rugby's not allowed to say the name of the entity from which they bought it, because it's a bit of an embarrassment for Barracks, but everybody else knows that it was Barracks who spent all this money, likely did good work, but it's been all useless to Rugby because this problem of getting applications turned from pending into actual still exists. And the reason Colombia became such a pain is that the old system allowed parties to file applications with claims in almost any sort of orientation, and it was not a digital database supporting this, so they had this absolute mess, especially after 2010 when Ventana's discovery was bought out for $1 billion. Everybody went to Colombia, and all of a sudden they were deluged with all these applications, and they overlapped, and they also sometimes compete with artisanal miners' claims, and they had no way of really sorting this out, and insofar as there was, it usually involved some sort of behind-the-scenes corruption, so the whole thing was in paralysis. And Colombia has been working on reforming its mine title system, and they finally worked it all out. They reduced the claim size to 111 meters by 111 meters to accommodate all these smaller existing claims, and it's now going to be done on a simple grid based on a digital database, basically similar to what map staking is all about in places like Canada, and unlike backwards places like the United States where they still use a primitive post-staking system, not a map staking system. So this is ready for signature. It's going to happen, supposed to happen by the end of this year. And before you can get the application approved, you need to have a meeting with the local stakeholder community and get an access agreement from them. And they had meetings scheduled for this last summer, but because the regulators didn't really want to do anything until the whole new law was in place, this kept getting canceled. But this will have to happen, and once this is signed, Rugby is optimistic that for the Pastora concession, they will have this meeting. Everybody in the local area is on side, and they will get that. They'll get the concession approved. And this is a problem because the meeting has to be organized by the mining ministry, and because they haven't wanted to deal with this, they simply not allowed these meetings to be convened. So this obstacle, this Kafka type situation, hopefully will end in the new year. And this will get a big boost from also the event this week. The big event, the Zijin Mining, the Chinese mining company, has a friendly deal to buy Continental Gold and its Bertica project for $1.4 billion cash. That's $550. That's 29% premium above what the stock was at. This deposit was discovered from scratch in Colombia. It's to the east of this Pastora application that Rugby has. It's supposed to produce 250,000 ounces a year from a 10 gram per ton deposit for 14 years. So this going ahead is a good thing. It's not entirely a positive boost for exploration in Colombia, as it would be if, say, an Nikko Eagle came and took out a project, because an Nikko Eagle is an independent Western company that has to comply with all the rules and cannot avail itself of methods available to Chinese entities for when they move into a country where there are problems with corruption and that. The mining company can get things happening because magically in a parallel universe something else gets done by some other state-owned Chinese entity. This does not happen in the free market world. It's part of the reason everybody is so pissed off at China with the rigged playing field where you have these multiple entities all collaborating with each other to disadvantage Western mining companies. So Rugby, even before this, news came out about the Continental Gold acquisition, it's been paying attention to what's going on with the permitting system. And another bit of good news, it wasn't in that press release that they put out, which was just about the Pastora concession, but it was about their Braska property, for which they already have title, but it's in this Choco copper belt, which is part of this belt that runs all the way from Panama to southern Chile and is full of world-class copper deposits. They have a copper moly system there. It's not going to be one of those gold-enriched systems. It's going to be more like those copper moly type in Chile. But that whole belt is also forestry area, and the forestry ministry has basically declared it off limits to exploration and mining. So they have been unable to get a drill permit for this project, and their last attempt failed early this year. But they have, in a recent conversation I had with the CEO, Bryce Roxburgh, he suggested there may be hope that there is a breakthrough, because Colombia has made a lot of money from gold and oil production. It's looking at this gap in this big, long copper belt, and the gap is in Colombia. Like, why are there no mines there? There are some interesting deposits in the northern part, but they're thinking we need to have copper mining as part of the Colombian economy. And so a higher-up ministry that's in charge of economic development is now sitting down with the forestry ministry, and they're working out, okay, we understand that we do want to preserve all this jungle and not have it wiped out the way it's being done in Brazil's Amazon. But is there a way where we can have the best of all worlds, where we have responsible development of certain parts that do yield a big copper deposit? And when you think of it, a copper deposit does not encompass massive amounts of land. It is still a relatively small footprint. So it becomes an act of economic balancing. Do we keep this jungle the way it is so that the post-FARC narco rebels that are making a comeback can sit there and repopulate this area and carry out their activities? Or do we take steps to develop the commercial potential in it, which keeps these other characters at bay and also benefits Colombia in general? So, to answer the original question, they're doing this work in anticipation of the mining system being finally reformed and implemented, and opening up a granting of title for these gold exploration plays. And also, they're hoping that there may be a turnaround for the Braska project. It's got the footprint to be a very substantial discovery. It's got the bornite mineralization at surface. It's drill ready. So 2020, even though other focus has been Argentina with the El Zanjan project, 2020 could be a turning point for the company, and it's classic bottom fish. They just did a 10 million unit financing at 10 cents. They announced it when the stock was still sort of 14, 15 cents. So of course the stock went down to that level. Now the stock is 7 to 8 cents. Much of the financing was taken down by insiders and friendly parties. And this is like the complete opposite of a bull market, where cheap financings get taken down by insiders because nobody else is invited to them. To this financing, everybody was invited, and of course only the insiders and long-term backers felt the will to put up the money. This is classic end of a bear market cycle behavior. It's possible it could continue for another year, dragging on as heading into the 9th year of a bear market. But it's also possible that maybe 2020, a new decade, finally things turn around for the junior resource sector.
We'll have more with John Kaiser right after this.
Cyprus Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cyprus Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cyprusdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, Tri-Origin Exploration announced a very dilutionary private placement that includes the existing shareholder exemption. What is this exemption all about?
Well, first, before I get into that, and that's a really interesting topic, and it's a very timely topic, just some background. We've talked about Tri-Origin and Discovery Watch for quite a few years. I've never really written about the company. I followed it closely. Bob Valiant is a geoscientist who's a big picture thinker. Tri-Origin's been a dog beneath 10 cents for, I think, at least 2009. It used to have a dual focus. They had projects in Australia and projects in Ontario. And in 2009, they began to separate them, and by sort of 2013-14, the Australian group had been pushed into projects had been pushed into a separate entity that was listed on Australia, and Bob Valiant finally started turning his attention back to his Canadian focus. But of course, we've been in 5 years of miserable bear market, so he hasn't been able to get any traction. It hasn't helped that he has allowed his salary to be accrued and hasn't converted into paper. Right now, there's about $400,000 owed mainly to him through accrued salaries and paying for expenses out of his own pocket. He can convert some of that into about 3.9 million shares at a nickel. But when you look at things from sort of a hard-nosed financial perspective, you look at this company and it doesn't even really qualify as a bottom fish. It looks like a zombie. And a zombie I define as a company which has no cash, no ability to do something about any of its projects that could change the fundamental value in the absence of, say, the metal price taking off and taking an existing worthless deposit and making it worth something. But Tri-Origin was interesting as a bottom fish as long as it had that joint venture with Sumitomo, who was earning 50% by funding all of the South Abitibi venture. And this was another example of Bob Valiant big picture thinking. When the Bear Island caution moratorium went off and this area to the southwest of Cobalt came open for staking, he went in there and staked a large chunk of this land in the eastern area, where he figured the Abitibi greenstone belt that sits underneath the Proterozoic aged cobalt plate was not going to be more than a couple hundred meters thick, and sold the story to Sumitomo that, hey, if we do modern geophysics in this area, we'll see targets that could be VMS base metal deposits or structures that could be Abitibi greenstone type gold bearing structures. So Sumitomo put about $2.2 million into this until the end of 2018, and while they confirmed the whole thesis behind it, they did not get a discovery, and so they lost interest, and all of a sudden, so nobody's spending money on any of Bob's projects, and so that turned into a crisis for the company this year. There is this interesting thing going on I talked about in a recent Discovery episode where De Beers, which apparently flew all the land in this area around cobalt, has done this deal where it's drilling targets for free on Tri-Orge and South Abitibi project area, targets that thinks are kimberlites. Why it's interested in this area is a bit of a mystery. The kimberlites to the north are all, uninteresting, low grade, never been developed. Something's going on here. I think it has something to do about rethinking where type 2A diamonds might be, but that's a story that we'll have to wait for validation to see why there's all this interest in this area. But Bob realized, okay, he's a zombie company. He doesn't have Sumitomo backing them anymore. His stock's down at 3 cents. So he went to the stock exchange and said, can I get a waiver from this 5 cents minimum? Can I do 15 million units at 3 cents and 5 million units at 4 cents flow through, and do a full warrant at a nickel that's good for 5 years or whatever it is he chose, and they said yes, provided that none of that money is used to pay back the $400,000 that you've accrued over all these years, keeping this company alive. So he agreed, and this financing's now out there in the open. The company is an orphan. It doesn't have any backing from any brokerage firm. So he's literally trying to find shareholders for this. And the traditional private placement exemption is accredited investor. And an accredited investor in Canada is somebody who has a net worth of Canadian $1 million outside of whatever equity they will have in their primary real estate. And in the United States, it has to be $1 million US, which is about 33% higher than in Canadian dollars. And this has become a very serious problem for the Canadian junior resource sector because the number of people who are Canadian who qualify for accredited investor status and can put money directly into companies, that's a small pool of people, which means that these juniors, insofar as they're not working through a brokerage firm, and the brokerage firms have largely shrunk to a very small number of boutiques, and the bigger ones, they're all bank-owned. They are just not interested in doing these types of deals in the juniors. In fact, the big ones all deem a boomer, all of whom are now 55 years or older. They deem these juniors, as unsuitable investments for the boomers. So something I've been fighting for is, why do you have to be a millionaire to be able to put $5,000 into a company and get warrants? And several years ago, several of the securities commissions sort of agreed and said, that's a good idea. We'll limit it to $15,000 per 12-month period per company. You can do as many companies as you want, but it's $15,000 maximum. But they insisted that you need to be an existing shareholder. And I do not know why they did that. Officially, it's presumably if you already own shares in this company, you have a better familiarity with it and are better equipped to make a decision. But the reality is, what they're really saying is our entire regulatory disclosure system is absolute garbage. Because if I hear that Tri-Origins doing this private placement with this exemption that applies to people who are not millionaires, I would like to go to the company's website and go to CEDAR and research all this and come to my own conclusion that this is a serious company, that this is something I would like to place a bet directly into the company. But what the Securities Commissions have said is that all that stuff that we regulate, that the company's files, it means nothing. You need to have known this company from some past engagement with the promoters or whomever it was, in order for you to be qualified to participate in this financing. I think that's ridiculous. And so I'm saying they need to scrap this existing shareholder requirement, and there's a practical reason too. Right now, the company has no way to verify that you actually already own it. You simply have to declare that in the form that they give you for this exemption, yes, I own shares in your company. And then, what if you're confused about that and didn't realize that you sold them ages ago, and it's not actually true that you own shares, and you give them the money and you get your stock and all that? Well, then the regulators, in their hunt to find out, well, was this a truthful filing by that individual? Well, if they were to, in some manner, find out that you actually didn't own these shares, well, what are the consequences? Well, there really aren't any consequences. And they really have no mechanism for forcing anybody to prove that they actually own shares in the company already. So the whole thing is this really ridiculous requirement that I sometimes think it's just a cynical ploy by the regulators to pretend that they're helping out these juniors by supposedly enabling ordinary individuals. And post-boomers, people who were born after 1964, they probably, the vast majority of them do not qualify as accredited investors, and they are now arbitrarily being excluded from participating in these junior companies. Back in the 80s when I started, the brokerage firms, they dealt with the retail public because they did these statement of material facts financings, and you could do $1,000, $500, whatever, and it was instantly free trading, and only and a tiny elite did these private placements, which at the time had a 1-year hold period, and so there was considerably more risk that by the time it was free trading, it was worth nothing. But they changed that to 4 months in the early 2000s, and since then, the people who do not qualify for this accredited investor, they have been marginalized in a very unfair, elitist manner, and the resource juniors, as the brokerage industry ceases to be an important funding source for these juniors, they are being starved to death for capital. And so I look at Tri-Origin here. They're doing this financing. It'll puff up fully diluted to $167 million. It'll give them 167 million fully diluted shares. It'll give them $650,000 to go in there and start drilling some holes on that Sky Lake project. There is an old resource on there. It's actually a project deposit found in the 50s. Lac Minerals had it in the 80s before it ended up being acquired by Barracks. And Bob Valiant, who worked on that project back in the 80s for LAC when he ran the exploration department, he went and approached Barrick a few years and got an option on that little parcel, and then built a 27-kilometer claim package around it, because as a geoscientist, he did his PhD in LaRonde-type systems, which are VMS systems in the Abitibi that have been overprinted with gold, and they're like absolutely fantastic. And based on his technical knowledge, he says this area west of Pickle Lake, it has the same potential for these types of discoveries, but of course because there isn't a deposit like that already there, it's only been looked at for outcropping high-grade Pickle Lake type gold vein systems. These themselves can still be substantial, 500,000 to 1 million ounce medium to high-grade resources. But in terms of looking at that bigger picture potential, the area has never been looked at. So here we've got all this stuff going on, this little company that's been around since 1991, never been rolled back, doing this dilutionary hit, and they are offering this existing shareholder exemption, which is basically available to anybody who calls up the company and says, can you send me the forms to do this? And so I think existing shareholder exemption, using it even if you don't own are confused about whether you own the shares or not, and pushing the regulators to get rid of this meaningless extra requirement that is neither verifiable nor has any consequences if it's not the case. This has got to be a major issue in the sector to help little juniors like Tri-Origin stay alive and give people an opportunity to make very big scores, because a company like this has a valuation of only $5 million, and were they to hit something substantial, the upside leverage is extraordinary, which is again why I think juniors like this, using this mechanism where they can get a warrant, this is perfect for post-boomers, for younger people to discover a sector that they really don't know much about because it has never been part of what anybody talked to them about. And it's time that a much younger generation figures out what the resource game is all about and how you can make an awful lot of money by giving money directly to the company, not just giving it to a millionaire who's selling cheap stock that they bought and are clipping the warrants so that they get a free lunch on the backs of everybody else.
John, thank you so much for the update.
You're welcome, Jim.
I'm Jim Goddard. We've been speaking with John Kaiser. His website, kaiserresearch.com.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.